All right. Okay. So on your research, that's basically about diversity information, how would you characterize your research from a 30,000 foot level? What would you say?
I would say we've got diversity information is sort of like obviously it's sort of in the spotlight at the moment, and whether we want to promote workforce diversity or not, we have a good amount of research about the pros and cons of more or less diverse workforces. We have much less information about how diversity information is used. And so, what our study is really honing in on is whether holding the underlying diversity constant, how does providing more information change job seeker behavior, and does it seem to be valued by job seekers? I think that's the innovation of our research. And then obviously, like, the field experimental setting lets us come in and flip that one switch while holding everything else constant. I think that's the other big draw card of the experiment. And then finally, we're able to connect, our idealized field experiment with real world disclosure decisions. And so connecting a field experiment to corporate decisions on the disclosure side, I think is another novel aspect. So I think those are the cool things about our study.
And so like the crux is sort of, it's not how firms communicate diversity information, but how is it different than that?
So that aspect is in there. I think that's the second part of the paper, where we say, in our field experiment, when we provide diversity information sort of randomly or exogenously to job seekers, do they seem more or less responsive to that information in their own job search? That response, we're able to then correlate it whether firms actually disclose these things publicly in their financial reports. So I think we do actually have that piece about, whether, not how firms disclose this information, but whether or not they even disclose it in the first place.
Right. Yeah, because I saw in your paper, you said that in 2020, 17% disclosed, human capital. And I'm guessing that in 2022, that's probably increased, considerably, right? I mean, the pandemic sort of set off all this, it just set a lot of things in motion that were not in motion.
Right. I think that's going to be a very interesting aspect to look at, is how the disclosure behavior evolves over time, whether firms will now look at other firms to set benchmarks, and whether we see this best practice of disclosure arising organically. Because we're doing this study sort of so close to the rule change, that additional year of data, like the fiscal 2022 data isn't going to come out until the start of 2023. So we're kind of seeing this thing unfolding in real time. But my own prior would be, we'll see more firms disclosing this kind of information, specifically about diversity metrics. But what's interesting is that public firms have always been required to provide some sort of workforce diversity information to the Equal Opportunity, now the name's escaping me, the EE&O, to the Department of Labor.
Right.
It's not like this information, it's not like they don't have the information. The justification, I think, for not disclosing it has usually been one about, oh, this is sensitive information, and that's why we don't want to disclose it, and less at the cost of collecting it.
Right. Well, do you think that, obviously ESG reporting and everything ESG has just, led to a lot of changes, and with institutional investors and even funds targeting, different social metrics and measures. Was your research motivated partly by the rise of ESG, complementarianism or whatever?
I think our initial, because I'd say the biggest piece of the paper probably is the field experiment. So we were actually, yeah, I guess it was more motivated by this debate in some ways. So I feel like there's been this talk about, do we want a stakeholder-centric model to work around in the corporate world, or do we want a more stakeholder-oriented view? And in terms of information disclosure, it's typically being couched in terms of, hey, is this type of information useful for investors to either buy, hold, or sell their shares? But under the stakeholder view, what information is material, it might affect other stakeholders now. So are there other stakeholders whose decisions could also be contingent upon the information they receive? So we wanted to think about, well, are there other stakeholders who are going to be potentially interested in this diversity information? So I think that's the perspective we came from it, which is that information is useful. We teach this in our own classes in our first accounting class. Who uses firms' financial filings? Investors is the main one, but then we always have these slides about, well, customers, suppliers, potentially regulators also use this information, and we're zooming in on the employees as another stakeholder group.
Right, because after all, they are the ones that are producing everything, and that matters. Do you find that certain types of firms lend themselves more to making these human capital disclosures? What did you see in your research?
So we found, there is industry variation across which types of which firms disclose these metrics, and you do see more sort of service-based industries, I would say, are more likely to disclose this information, and heavier industries like mining and chemicals manufacturing, those types of industries are less likely to disclose this information. We also find that larger firms are more prone to disclose this information as well. But we don't really speculate too much on what the reason is. It could be that the larger firms have, maybe more resources to collect this information, or there's more pressure on them to disclose that information, like they're more visible. So we don't sort of speculate too much on that. But there definitely is a lot of variation across industries and firm types regarding who discloses this information.
Who did you say was the group that disclosed more? The first thing you said.
It's typically service-based industries, and I guess maybe sort of more consumer-facing industries, like apparel and clothing is one that had a really high disclosure rate.
Right. Do you think that's because of things like child labor and that sort of thing, or is it something else, beneath that? I'm just wondering why apparel would do that per se, because my first thought was high tech, the FAANGs, right? The FAANG stocks. I mean, surely because their workforces care about this a lot more than other industries, and these industries where there's younger workers, but
right. In terms of why apparel, so yeah, we didn't go sort of industry by industry and drill down exactly why a certain industry is more likely to provide this information. This is my own hunch, at least for the apparel industry, is that a lot of the employees might be sort of working in the retail on the customer facing side, and there it might be quite obvious to consumers if there is a big a lack of diversity in the workforce, and that could raise some issues. But in terms of the field experiment, in terms of which job seekers seemed most responsive when we provided this information, we did see a big, a lot of the effect was in entry-level jobs and less on the upper end managerial job perspective. So there could be two reasons for that. The first is that it might be that younger people generally are more likely to apply for these entry-level positions. Right. And younger people also are more, aware or sensitive to diversity issues.
Mhm.
There's another statistical discrimination story, which is that when you're just coming out of college and looking for your first job, you don't have this track record really of how you are, how are you going to perform as an employee. And as the recruiter, you might be more prone to make employment decisions based on like other heuristics, which could be, based on the demographic profile of the applicant. Whereas once you're looking at the managerial type of job, then your applicants have more information and you don't need to, as the recruiter, perhaps rely on these rougher heuristics. So there's two different stories for, those both explain why we see a stronger effect for entry-level jobs.
Yeah. And are these entry-level, like out of college type entry-level jobs, would you say, or other types, like, people that haven't gone to college, or
it could be both. I don't, because so the firm that we partnered with for the field experiment is called Zippia, and they provide information to job seekers about, they provide job post information. They try to inform job seekers about which type of jobs are going to be the best fit for you, so you don't, end up working for a firm that's a poor fit and you suddenly have to change jobs.
right.
So I don't think they necessarily discriminate whether, entry level, I think just means you're sort of in the first couple of jobs within that career trajectory.
Yeah.
I think that definitely would be correlated with, straight out of college.
Yeah, that's interesting. How do you see, I think you mentioned something about, institutional investors are influencing these types of disclosure increasingly. What did you see in your research there, or what do you think? I mean, your viewpoint about that.
So we didn't do anything directly with institutional investors in the study, but what we did find is that when we provide the information to the job seekers in our field experiment, the industries where the job seekers are more responsive, those are the industries where the firms are more likely to disclose in the annual reports. And so where we're a little unsure is like when the firms are making these decisions about disclosure, is that because they're, catering to employees who might be looking at the information? My personal view is that's less likely that,
right.
Someone who's coming out of college and thinking about, should I work at General Electric, is pulling up General Electric's annual report and saying, okay, let me see how diverse the workforce is. What I think is more likely is that the investors are pricing in how employees are going to be behaving. And so there's this like alignment or congruency between what investors are pricing in and how employees are using the information. So there's like the stars are sort of lining up. I think. That's my view.
Two-tier thing. Well, because with investors, institutional investors, obviously they, they're also trying to tick boxes on ESG, for one, and for two, there's a lot of drive towards impact investing, conscious capital investing, sustainability. And, then there's the issue with your workforce. If you're in apparel or other things, the productivity factor, the labor factor, the churn factor of labor, turnover. So I would think, for, like you said, certain types of industries and with certain institutional investors, that it's a really important profitability metric, that's tactical and strategic, right?
Yeah, definitely. I mean, all those things you mentioned, like the turnover, and just being able to attract, the sort of the best of in the pool, those are going to affect the bottom line.
Right.
And if diversity information is sort of changing that allocation of workers to firms, I don't see why investors should not care about that information then.
Yeah.
Even, putting aside, the investors might not care about the social aspect. They might not really sort of have strong views about the way the world should look. but they would still price in these effects.
Right.
I mean, yeah, so that was kind of the looking through these disclosures, it was really sort of messy. It wasn't like, hey, all firms, when they disclose, it looks the same. It was totally different. Some firms would give you this information in a table. Some firms would tell you, hey, this is the proportion of women employed at entry level, managerial level, and C-suite, and they'd do that by country. You'd have other companies just put that in a sentence, but that sentence is buried in paragraphs of other narrative, which does not contain hard information. Some firms would tell you, oh, this is how many sort of people of color we employ. Other firms would tell you this is how many people of color we employed this year. So they're really focusing on just the change and not the historical level. Some firms would say, well, this is what we aspire to have in the next 2 or 3 years. And so it's really hard to compare these types of disclosures against each other. So I think there's also a big comparability issue, which would potentially limit, the ability of, a money manager to sort of input all the data, put it into like a tabular format, and then set a screening rule based on that.
Right. But at the same time, I mean, if you're kind of looking for, a certain sector is something you specialize in with your fund, or it's a large proportion of your portfolio or whatever, I mean, it might be a proxy for you for profitability, alpha, whatever, kind of thing, because the E part of ESG, that can just be a cost, right? Whereas the S part of ESG is more direct, directly related to productivity, which is growth potential, right? I mean, it's kind of, where your growth potential is hinging on your people, to some extent,
Definitely. I mean, so we have a small survey part of the paper as well, where we reached out to users on the Zapier job seeker platform. And, the comparative advantage of the field study, where we sort of randomly assigned the diversity information, the advantage is sort of obviously like figuring out what's the effect of providing information. It's less suited to figuring out, well, why do job seekers seem to respond to this information? So we tried to sort of address that second question a little bit more carefully by directly surveying some of the job seekers. And we asked them, do you value this information? And if so, why? And if not, why not? And, probably, I think it was about 70% of the job seekers said we value this information. And then we gave these different reasons. One of them was, it's informative about whether I'm going to be discriminated against personally. And, it's about promotion prospects. Right. Another one is about, I just value diversity because I think that's the way society should look. The other one was, oh, this is actually going to be a better firm to work at, or it's an indicator of long-term success. I think that's going to the point you mentioned before. And we saw support for all of those reasons. So I think there's definitely, this a sort of a potential lineup between sort of productivity and diversity. But then, there's also, I want to sort of temper my points and say there's also literature which argues that, hey, maybe this diversity could be costly to the extent it creates like coordination costs amongst within the workforce, because you have different groups sort of with different viewpoints. Sometimes that's productive, but sometimes there are also costs for that. So
right.
There is some literature which sort of in the social sciences which looks at coordination costs when you have different types of groups in the same environment.
I wonder.
We did see 30%. I said 70% of job seekers seem to value this information in that survey. That means 30% also didn't. And again, the reasons were mixed. Some of them said we already have access to this type of knowledge, and others said it's not a priority for us as well.
Yeah. Well, was there anything that surprised you in the research?
I'd say the biggest surprise probably was the 17% figure when we looked at the human capital disclosures.
Right.
there's so much talk about well, knowledge and employees and human capital are value drivers now compared to maybe a firm back in the 1950s, and we're moving towards this knowledge-based economy. So my initial expectation was like, given those sorts of dynamics and how little balance sheets seem to reflect the market capitalization of firms these days, that this information should be material, or is likely to be material. And so if it's material, the firms should talk about it.
Right.
But I guess that was the surprise for me, because we're in this sort of principles-based disclosure regime where firms have to talk about it if they deem that it's material.
Right.
And
Right.
so it's sort of it's mandatory on one aspect, but it's voluntary in the other.
Right. You get to that point about the nature of, business models and how, like the FAANG stocks, a lot of their valuation is based, and their market cap is based on intangible factors, human capital, and you can see some really variations, biotech and, the Googles, the Amazons, the Metas, all that. I believe Sean Wang did some research on that, and I profiled it. And yeah, this human capital element, is becoming more visible to investors, to the world, which is a good thing, right? I mean, it's evolving, recognizing people, and but yeah, I see what you're saying, that that a lot of this was found in apparel, which is not intangible focused, right? It's not, their valuation isn't based, it's on goods, right? But they do have the labor issues, that are part of their costs, it's part of their costs. But I mean, well, Google and all, I mean, human capital's expensive too, right? If you're in Silicon Valley or or wherever, people make good money, or Seattle or wherever. But yeah, that's interesting. I mean, so was there anything else that you thought that you thought about that we haven't covered really, that your research you want to?
There's a potential policy implication, which is that, we show this information, at least our field experiment shows that the job seekers are pretty responsive to the diversity information. But then it's sort of contrasted against the lack of disclosure we see on the corporate side. So one might make an argument that, maybe there is scope for more disclosure about, these types of metrics. I mean, so the way we were thinking about it is that if I'm a job seeker, just from my, I have sort of like I describe myself as Australian with Indian DNA. And if I'm looking, if I was looking at two jobs and I say, well, one of them is, going to be a better fit for me, and one's not going to be a great fit for me in terms of promotion prospects and culture and things like that, it might be good for me to figure that out at the outset before I go and start working there and burn a year of my life before deciding, oh, now's the time to jump ship. And we know that, turnover is pretty costly for employees and firms themselves. So this is sort of now bordering on my personal views, but I think sort of there is a role for more information from the perspective of maybe we can better match employees to job seekers from that perspective.
Right. Well, and this kind of gets back to your other research we talked about, the disclosure, emissions disclosure research that we talked about before, is that, you found that one of the big effects was on peers, within industry, that if you're disclosing, it starts causing your competitors and your peers to start disclosing. Maybe this will be like this chain reaction, of peers, because there is a lot of pressure, right, to, do things better and be, show that you're you know, a conscious firm, you know, socially conscious.
Right, right.
So I mean, I wonder, do you see that that could potentially be the case with, you
I
know,
think so. I think firms could set benchmarks against each other in the same industry in exactly the same way and say like
yeah,
this peer firm is has this level of diversity. Is that something we want to strive for or aspire to? Um, I I'm sort of much more. This is personal. I don't want to represent my co-authors here because there's also like uh, everyone has their personal views about this stuff as well. Where I sort of maybe I don't know if I should be recording this part, but I sort of worry that by focusing on these high level metrics, it might sort of if there really are diversity issues in society, there's like deeper issues we need to address. And by just having these like metrics highlighted, there
yeah,
could be like a superficial treatment of the issue
sure,
without addressing the underlying issues. And I think this could be the same thing, for emissions measurement as well. There
yeah,
are many different aspects that firms could report on. And by one metric, by our aspirations or our changes, or by just focusing on this segment or defining diversity in this way, oh, now it's become more of a box checking exercise.
right,
This is more from a societal perspective, I'm thinking. So that's the other thing. While I also think providing more information is useful for sorting of employees into the best fit for the employer. Like I mentioned before, if I was doing my own job seeking, I'd like to have that information so I don't end up wasting a year of my life. And this is my personal concern, I don't want to sort of attribute this to my co-authors. My personal concern would be that it also facilitates a pure box checking exercise
yeah,
without addressing sort of the issues around diversity more meaningfully.
right, which is a lot of what's happening with the backlash about ESG reporting, you know, that
Right.
there's the effect of, it's the same as, you know, greenwashing, right? It's that
Exactly.
kind of thing. Only there's probably a word in a social context. I don't know what that is yet, but I'm sure someone will come up with it. Well, great. I mean, was there anything that you think we didn't cover generally that's important?
No, I don't think so. I mean, I think this was a good conversation because usually when we've presented the paper, we usually get 90% of the questions about the field experiment, where we had these job seekers who were clicking through job posts, and some of them we provided the diversity information to, and some we didn't. And we usually run out of time, and we don't get to talk about the corporate disclosure side. So it was good. I think we kind of flipped it
Yeah,
for this chat because we think that part is super interesting as well.
sure. Well, absolutely. I mean, it's kind of like it's a big driver of, you know, capital and trends and, you know, all sorts of things, especially, you know, the way things are changing post-pandemic, you know. So, well, brilliant. I'm gonna stop